Hi, my dear students. It's been so long that we haven't met, but during the changing times, we have to adapt to the changing situations, and this is a new mode of teaching, or rather, a learning process. And so, I welcome you all back to the classes again. And this is just a quick recap of what we have studied in financial management module number one. And the first module talks about what is business finance or finance function, meaning definition, everything, the scope of financial management, and further the objectives of financial management and how profit maximization and wealth maximization helps in achieving the objectives of financial management, and finally the organization of finance function. So this is the first module. Okay, now let's discuss on the finance. What is finance actually? Finance is the provision of money which is required by the organization, especially business organization, to carry out its operational activities and to achieve its targets. Without finance, no company can survive. So this is the importance of finance, and the finance is being classified into public finance and private finance. This is the traditional concept of classification, wherein public finance deals are dealt by government institutions, state, central governments, local self governments, whereas private is dealt by public finance or personal finance, business finance, and non-profit organization. So in public finance, the money of the public is being used by the institution for carrying out the general activities, whereas private finance is aimed at achieving the individuals or the business organizations targets. So this is the basic classification of finance. In financial management, we are mainly concerned with the business finance or the finance used by a business organization. So, business finance is the process concerned with the acquisition of funds, use of funds, and distribution of profit by a business firm. In this meaning, we can clearly understand what is the importance of business finance. First, we need to acquire funds. Acquire funds means that we have to select the cheapest source of fund and also see that the value of the firm is not decreased. Second thing is you have to use these funds in a properly arranged manner with proper criteria and priority to different departments. And you can, for example, like if you have 10 lakh rupees, you have raised 10 lakh rupees through different sources of funds, or like you have taken some kind of borrowings from the bank, you have taken some kind of uh, finance from the public by selling your shares, and you have taken 10 lakh rupees with you. You can't just keep this 10 lakh with you ideally. You have to use this 10 lakh in a wiser manner. You have to distribute these funds to different priority areas in your business, like for marketing, sales, or for production, for purchase of raw materials. All this has to be dealt in a proper manner. And finally, you have to distribute your profits or your earnings to your shareholders or stakeholders. This entire thing comes into business finance, and business finance involves financial planning, very important in terms of management aspect. Planning, which we have already dealt in the management subjects, is the primary step in your process. Without planning, you can have a good result. Second thing is you have to acquire funds from the cheapest source or most viable option. Third thing is you have to use these allocated funds in a proper manner. And finally, you have to have financial control, which means if there is any kind of deviation happened, then you have to correct it immediately so that you are not in a position where you'll stop the business.